I'm going to get started. And thank you for everyone for joining. Welcome, everyone. And today we're going to be talking about working towards net zero and talking about the tenant and owner partnerships and how they've been evolving. So I'm Vidya Unnikrishnan, Research Manager focusing on sustainability and resilience at ULI. And today we're going to be digging into how owners and tenants can and honestly need to work together if we are going to make real progress on decarbonization across the real estate sector. And to help us unpack all of this, we have three amazing experts with us today on this panel. Phoebe Leung is the Senior Manager for Sustainable Development at Swire Properties. Next is Andrew Macpherson, Executive Director and Head of Asset Development for APAC at JLL. And finally, Jonathan Tong, Vice President at PAG. I'm really excited to dive into this conversation with all of you. I mean, we've been talking about it right before this call and last week. So we've got a lot of things that we need to discuss. And you're bringing a lot of diverse set of experiences and perspectives here. So this is going to be a really good discussion. And a few housekeeping notes is that we'll be taking audience Q&A at the end, so please drop them into the Q&A chat as they come to mind. And- All right, so here's a quick look at what we'll dive into during this hour. So first, I'll start with a brief intro to ULI and then give an overview of our five-part primer series, the tenant primer series of tenant-owner engagement, followed by a quick kickoff poll. And then our panelists will share their knowledge about the market overview and their tenant engagement program and experiences from the tenant perspective as well. And then we'll have a panel discussion and dive into more details of your various practices and experiences. And then finally, we'll close with the Q&A from the audience. Okay. Yeah, so one of ULI's top mission priorities is our net zero mission, where we aim to accelerate decarbonization in the real estate sector. And according to the latest IPCC projections, the global economy needs to reduce greenhouse gas emissions to net zero by 2050 or risk the most extreme irreversible impacts of climate change. And we've heard this a lot, right? With the building sector contributing to like 40% of global emissions, the cities, countries, investors, developers, and tenants are looking to the sector to meet these reduction goals. And this is where ULI's real estate journey kicks in. Um, and for net zero, seen here on the right side of the screen, tenant engagement is an important piece of the cycle. And we run this research through our decarbonization program that the Greenprint community works closely with. And this Greenprint is a global community of practice of about more than 130 owners, developers, and investors who have this shared commitment to sustainability. And we tap into this Greenprint member base for our research to feature in reports, papers, articles, and participate in convenings and webinars like this. And actually, Swire Properties and JLL have also contributed to the Tenant Primer series that I will be speaking about shortly. And if you're interested in joining the Greenprint community, please email us. Jenny, can you drop the email in the chat for those who want to join us? All right. Okay, so going back to why tenants, like I mentioned earlier, the built environment accounts for around 40% of global emissions. And in dense urban areas, buildings can account for up to 70% of these emissions. Taking a look at the Architecture 2030 pie chart here on the right, we see that 40% of global emissions are accounted for by the built environment, and 20% of that can be attributed to building operations. And with most buildings being tenant occupied, it's clear that critical piece of the puzzle is their emissions, right? And tenant spaces, in fact, can represent more than half a building's total energy use. And so, for whole building decarbonization to truly be successful, the tenants and owners just simply have to work together. There is no other ways about it. And so we've heard from several members who are developers that they want to learn how to better collaborate with tenants on this journey. And there's also a really strong business case for that, both the tenants and the owners. So owners can reap increased property value from reducing energy costs, increasing resiliency, and improving sustainability features. And these features help attract and retain tenants and even increase net operating income through higher rents and lower operational costs. And for the tenants, on the other hand, the benefit from meeting any corporate emission reduction goals they may have. They might also get lower utility bills, improve overall occupant well-being. And for an office tenant, this can even help with employee satisfaction and productivity, which a lot of tenants are thinking about now. So why is this collaboration trickier than it seems if both tenants and owners benefit? The thing is, are responsible for a significant portion of emissions, but owners are often held responsible for decarbonization. So this creates the split incentive issue. So why should one party pay for improvement while the other gets to benefit? For instance, an owner might install solar panels, but it's the tenant that gets the reduced utility bill. So this misalignment discourages investments in upgrades, even if they are cost effective overall. So this is why we created the 5-part primer series on tenant and owner engagement strategies. Each primer covers a tenant owner engagement strategy that helps with overcoming the split incentive and reaching net zero. And you can find the series at the QR code on the screen. So if you scan that, you will get a link that will take you to all these 5 reports. All right, so let's dig into each strategy. So green leasing is a big one, right? Green leasing language helps align owners and tenants on sustainability goals, helping overcome the split incentive. So this can include incorporating cost recovery clauses or building mechanisms that generate trust and define responsibilities and benefits to both parties. Data sharing. So, whole building data sharing is highly coveted and requires several stakeholders working together. Ultimately, you can't manage what you don't measure, and energy and building performance data are foundational to achieving net zero structures. And without accurate and shared data, it's difficult to even set credible targets, monitor progress, and optimize building operations. So the third primer was on tenant fit outs, which is the process of making a space ready and functional for a tenant's needs. Fit outs present a unique opportunity to improve energy efficiency and reduce embodied carbon. So owners and tenants should collaborate much early in the design process to prioritize efficient layouts, modular systems, low carbon materials, things like that. The fourth one was behavior change, and it is the human side of decarbonization. And this primer emphasizes how owners can encourage sustainable behavior change amongst tenants through strategies like incentives, nudges, gamification of sustainability actions. And when individual habits align with a building's overall system performance, the collective carbon reduction can be substantial. Our last primer was about harnessing renewable energy, which makes a case for renewable integration, discussing various solar billing strategies, battery storage, offset renewables, and grid interactivity, and how these strategies can overcome the split incentive. So, to kick us off, I want to get a better sense of priorities. So, pull out your phones or laptops and use the QR code or URL to access Slido. And let's answer this question. Based on what we've discussed so far, which of the aforementioned strategies would you prioritize to comply with regulations, lower emissions, and foster collaboration between owner and tenants? You can rank the strategies. I'll give it a minute. Mm. Okay, so green leasing and data sharing, as expected, these two are the top priorities. This shows that there are clear responsibilities and expectations having actionable data and these are foundational for a net zero strategy. All right, thank you for your participation on that. Okay, so now that we're level set on where the audience is coming from, I am going to pass it off to Andrew from JLL to give us the overview of the market trends on green buildings and what that implies for tenant and owner relationships.
Great, thanks very much, Vidya.
Yeah.
Obviously, I agree with all those points that you made earlier. I've pulled together a few slides which contain quite a lot of market data and some facts and figures, so hopefully we can bring those key points to life. So at JLL, we provide a wide range of services for corporate occupiers, including leasing, facility management, workplace design, and also construction. So we do have a huge amount of data on tenant preferences and future plans. And as you can see on this recent occupier survey, we've found a high proportion and an increasing proportion of tenants are actually deselecting buildings that are not, for example, resilient to climate risk or don't meet their sustainability requirements. Um, that said, in addition to ESG credentials, tenants are also looking closely at the amenities and performance of the building in search of better human experience for their employees when they're choosing the best building to occupy. So if we go on to the next slide, you'll see some recent JLL research on green certified buildings. So this is a league table of grade A office buildings in Asia Pac. As you can see, top of the league there is Singapore with 95% of grade A buildings are green certified. And as a result, essentially there's no real green premium in Singapore because it's a kind of level playing field. All of the best buildings are green certified. But that small percentage that are not are really suffering from what we call a brown discount. And tenants are kind of deselecting those buildings. If I pick out Hong Kong, where I'm based, you'll see that only 49% of grade A buildings are green certified. And our data definitely proves that these buildings at the moment do achieve higher levels of occupancy and they're also renting at relatively higher rates than their non-green certified neighbours. On the next slide, I've gone into a bit more detail in terms of the tenant decision-making process, and we've ranked here a number of factors that tenants evaluate when they consider new leases. Um, so occupancy cost, location, and the grade of the building are still the most important factors that tenants take into account. But as you can see there, sustainability, technology, human experience, the reputation of the landlord, for example, are by no means insignificant. And in fact, it's a kind of balancing act by tenants. So they're looking at those key factors of location and cost, but they're also weighing up what are the benefits that the building provides in terms of talent attraction, productivity, that type of thing for their staff. So it really is a kind of overall evaluation. And as I say, sustainability, technology, and experience are moving up the league table. A good example of this, I think, the Henderson in Hong Kong. Tenants are definitely paying higher rents to occupy that building, and it's not really because of its location. It's not the best location in Hong Kong, but it does have a distinctive design. It's got fantastic amenities, and it's highly certified. So clearly, tenants are choosing to pay a bit of a premium for that kind of performance. So on the next slide, what I've done here is kind of summarize what we're seeing in new building design, kind of range of amenities and specifications that most of the Grade A buildings are being built to. So if I make reference to real examples in Hong Kong, I've mentioned the Henderson, High Sands Lee Garden 8 is very well specified. Hong Kong Land with their One Causeway Bay, and right next to me here in Taikoo Place, Two Taikoo Place from Swire. So these are all setting much higher standards in terms of amenities, specifications, ESG, and it the evidence of that is basically what we're calling the flight to quality. So that's resulting in quite a bifurcation of the market and forces owners of older buildings that maybe when they were built, they were classified as grade A, but they've now dropped to kind of grade A minus or even grade B. So in order to protect the value of their buildings, they really have no choice but to upgrade them and try and retrofit as many of these kind of features and amenities as they can. So on the next slide, I've just summarized the main areas of upgrading as you would expect. The key themes obviously align with what's important to tenants and occupiers. So sustainability is a major area where landlords are upgrading their buildings to achieve sustainability certification. But also, I'll show on a later slide, there's definitely some win-win opportunities with sustainability upgrades because obviously they reduce energy consumption and that saving can potentially be shared between landlord and tenant. As I said, human experience, smart building technology. So we've probably all seen the growth of Wired Score and Smart Score around the region. So that's evidence that buildings are being built to or improving their technology capability. And then obviously flexibility. Tenants are really looking for more flexibility going forward. So on the next slide, I've tried to articulate what I see as potential win-win solutions. And I think this, as we were chatting just before we went live, the landlord-tenant relationship has definitely evolved over recent years. So in simple terms, you could say, yes, the landlord is trying to achieve the highest rent and the tenant is trying to negotiate a lower rent. But as you can see, there are a number of areas where the goals or objectives of the landlord and tenant can be quite nicely matched. And by no coincidence, that follows areas such as human experience, whether it's attracting and retaining tenants or whether it's attracting and retaining talent, the brand of the building, and obviously everything around ESG and reducing operating costs. And bearing in mind that occupancy cost is still top of the list for tenants, I think there's a growing opportunity for energy savings and the magnitude of those energy savings to potentially be passed on to tenants through lower management fees. So that may be an area where the landlord could make their property a bit more affordable by passing on some or all of those savings. And then on my final slide, um, pleased to see the poll came out with green leases as perhaps being the most impactful way forward. So I've just put together a few facts and figures here around explaining what green leases are. Um, so as you mentioned, Vidya, the green lease is basically a way of documenting the plans of the landlord for improving ESG performance of their building over time. At the far left is what we call the light green lease. So basically, these contain beneficial requirements, but they're non-binding commitments. So typically, form a kind of MOU. Whereas at the other extreme, the dark green lease, they are legally binding commitments with measurable outcomes and, in fact, penalties for non-compliance. So an example of that might be the landlord achieving a certain level of energy usage intensity by a certain date. So clearly, from a tenant point of view, who's kind of mapped out their own ESG journey over the next few years, this is a way of getting some kind of assurance from the landlord that they will actually follow through with their plans to achieve a more sustainable building. And landlords also see this as a differentiator to attract tenants. And I would say, looking around the region, at the moment, Australia is probably the market leader with a few legally binding so-called dark green leases. I read that the Australian government is a first mover in this area. They are planning to only occupy buildings going forward that have a minimum of 5.5 neighbours energy ratings. Another example in Australia is that a major tenant in Brookfield's 680 George Street in Sydney, they've renewed their lease on the basis that they can break that lease early with no penalty if the landlord is unable to electrify the building by 2030 to align with their own net zero carbon goals. So that's a quite a major example. And then finally in Singapore, making some good progress with the Building Construction Authority providing green lease toolkits to encourage adoption. And also landlords can be awarded green mark points for implementing green leases, which I think will further incentivize the take up. So I think the future looks quite positive for green leases. So back to you, Vidya.
Yeah. Thank you, Andrew. I just have one a quick question, actually. So these leases, right, in the markets that you're saying that we have these dark green leases, is this pressure coming from external factors like regulations?
Regulations are definitely accelerating the move in that direction. As I say, some markets, governments have been more robust, let's say, in terms of the regulations. I would say that, I mean, in a way, it's quite onerous from a landlord's perspective to sign up to a certain roadmap for sustainability, not knowing what the future holds in terms of macroeconomics and supply and demand, etc. So I can see that it's quite, landlords are a bit nervous to kind of sign up and also sign up to potential penalties or lease breaks. But I
Mhm.
think as their own net zero carbon roadmaps are firmed up and they've committed to that and they've allocated funding, then I kind of see no reason why they wouldn't put their money where their mouth is, and in so doing, in the early stages, be a kind of first mover and attract the best tenants.
Right, gotcha. Thank you. Right. That was a really clear picture on how the market is shifting. And so let's now bring it down to the building perspective with Phoebe's experience. Over to you, Phoebe.
Thank you, Vidya, and thank you for the opportunity to share. I'm from Swire Properties. My name is Phoebe. I'll give a little bit of background into our sustainability work and then how our strategies for working with tenants. Next slide, please. So in 2016, we introduced our sustainable development vision, which is to be the leading sustainable development performer in the industry by 2030. And in the same year, we launched our SD 2030 strategy. And partners, which include our tenants, is a core part of the strategy as well. And we see tenants as a key partner for our placemaking and placekeeping efforts, which is in the middle, our places pillar, and also to help us to meet our environmental performance. And these performances include our 1.5 degrees aligned science-based targets, as well as some of the emerging trends, such as nature-related disclosure. So in 2024, Swire Properties became the #1 in the Dow Jones Best in Class Index globally, and that has been a good milestone for us. But as all of us know, there is some changes in the ESG landscape. And so for us, we also need to think about what is the value that we can create through sustainability. And tenant engagement is a good showcase for that. Next slide, please. So just now, I think Andrew also touched on this. And I think in the next few slides, I will talk briefly about some of the reasons why we are working with tenants. I think firstly, to echo the point about the potential for green premium as well as brown discount, a lot of our tenants are coming to us looking for specific ESG performance for the buildings. So some of them are willing to pay more for a green building, and some are not willing to pay when they realize that the building has fallen short of the ESG standards. So that is also an important foundation of our green building strategy and tenant engagement strategy. Next slide. And when we look at our own tenant base, we also see that these market trends are reflecting it. So an example is our 2025 Taikoo Place tenant survey, where about 80% of companies telling us that they actually have global sustainability goals, and some of them are also translated into more locally specific goals. So that means that our office tenants are actively seeking partners in their own sustainability journey. And as we were talking to them and through our surveys and also looking at industry research, some of the top requests from our tenants are data collection and also to strengthen the technical know-how on how to achieve their environmental goals. Next slide. On another topic regarding retail tenants, is a very different kind of environment for real estate. But at the same time, sustainability is also becoming more important as the new generation of consumers are looking for more sustainability experiences and products that are aligned with their sustainable and healthy lifestyle. So for us as a landlord, this also creates an opportunity for us to work with retail brands to curate flagship store designs, products, and experiences that would align with these emerging values and making our malls a sustainable retail destination. Next slide, please. So with this backdrop, we have created an ecosystem of tenant engagement programs that would tailor to the different needs of different types of tenants. And amongst these programs, the common themes are sustainable design and use of the premises, access to some green tools like smart metering, data sharing, capacity building, business networking, and employee engagement. And I will spend the next few slides to talk a little bit more about each of these programs. Next slide. So the first one I would like to talk about is the Green Performance Pledge, GPP, and it is a program that is catered to our office tenant base. The whole framework is built upon the green lease model, and it covers fit out and operations. Since we launched this program in 2021, we have about 200 tenant companies from very diverse sectors, as you can see on the screen, say finance, luxury, legal services, IT, etc. And just this year, as we have our celebration event, we found that there actually have been a 50% increase in participation in our recognition scheme on a year-on-year basis. So this program is growing and is a testament of the popularity of it. And as a result, we have incorporated the GPP as a dedicated green clause in our standard tenancy agreement in Hong Kong. Next slide. So as part of the GPP, we are providing tenants with an array of green tools. So that includes smart energy metering and water metering, waste monitoring, as well as access to some data dashboards on the tenant portal where they can see their daily and weekly utilities usage and waste generation. We also have a capacity building program for office tenants with quarterly learning experiences and helping their sustainability reps and green teams to equip with skills to drive change within their workplace. Next slide. So another program that we have is the Green Kitchen Initiative. And as you can see from the photos, it's focused on our F&B tenants. And that's where Andrew talked about fitting out. We started with fitting out for F&B tenants because they have much higher footprint for energy usage, water usage, and waste generation. So we work with them from the design process in order to equip them with more energy efficient equipment, water saving appliances, and also reserve space for waste management. This program has got good buy-in from a lot of major F&B groups like Maxims. And to date, we have about 25% of our F&B lettable floor area as part of this program. Next slide. So in this program, we focus a lot on the technical support and advice. The recognition scheme itself has some prerequisites regarding lighting, water taps, and also food waste separation. And we also provide additional guidance and recommendations depending on whether the tenant is in the fit-out stage or whether they have already been operating. Next slide. And the final program that I would introduce today is the Green Retail Partnership. It's quite brand new. Last year and this year, we have signed a partnership with LVMH and Kering Group, respectively. And this program has a synergy with our strong retail-led pipeline with new developments in Xi'an, Sanya, and Guangzhou, and also major upgrade projects in the Taikoo Li and Taikoo Hui portfolios. The focus of this partnership is on the new flagship store design and also on the data sharing in the operation stage, as well as knowledge sharing between Swire Properties and these groups on emerging topics like nature, circularity, the EU taxonomy, and climate resilience. This is a new space that we are very excited to explore. So I think all in all, this is a brief introduction of our tenant engagement program, and very happy to have more discussion later on in this webinar. Thank you.
Thank you so much, Phoebe.
Vidya,
Yeah.
do you think I could just chip in? I think
Yeah.
Phoebe's reminded me of something. I think when I talked about the green leases, I probably emphasized a bit more on the landlord's obligations. But as Phoebe mentioned, the tenant also has got a responsibility. So,
Right.
low carbon fit outs, deploying occupancy sensors to enable lights to switch on and off. So there's kind of an equal responsibility on behalf of the tenant as well.
Right. Yeah, that's a good point. Because we are seeing that tenants are getting more and more sophisticated in their demands or requirements for their spaces, right? So it's not on the onus of the landlord only. The tenants also come with a lot of things that they can execute as well.
Yeah.
So
And the light went off here because here we go. There's an occupancy sensor, so it switched the lights off. They've come back on, so I need to move around a bit more.
Oh, okay. Good. Okay. All right. Well, Phoebe, that gives us a lot of insight on the quantitative impact that we can have when owners actually with a qualitative mindset, right? Like actually having a good relationship with their tenants and working together. It's a true collaboration. And so now we can hear from Jonathan on how this translates from an owner's perspective. Jonathan, over to you.
Thank you, Vidya, and thank you, ULI, for inviting me to share, and thank you, everyone, for joining and listening to this webinar. What I want to do is share a bit on kind of who we are, where we're based, and kind of what we do in this space. I think maybe what would be interesting is sharing a bit of our priorities and our expectations as tenants, and also some of our sustainability objectives. So really just, as a background, for those of you who do not know PHE, we are an alternative asset management firm based in Asia, and we invest mostly in Asia Pacific. We manage over 55 billion US dollars on behalf of over 300 institutional investors worldwide. You see on this map here that we have 13 offices based in Asia Pacific. I am based in Hong Kong in a building, and I'm a tenant. We are a tenant of Swire Properties, hence we are in this webinar sharing kind of our experiences with Swire and also with JLL as well. We do pride ourselves on being local and that, our decisions are made locally. And so, but our focus when it comes to net zero has, been both operational, but also on our investments. And maybe on the next slide, I'll cover very briefly kind of what we do as a firm. Across our firm, as I mentioned, we invest on behalf of our investors across three main strategies in private equity, real assets, and credit markets. And essentially, what we try to do when it comes to ESG or sustainability, we use kind of our in-house approach. We call it PAG Impact. Essentially, we want to have impact in where we invest and where we can have sustainable long-term value, both for our investors and also for our environment and society. So for our private equity, real assets, and credit markets, these are very different asset classes. And for each investment or each asset class, we would have designed tailored frameworks on how we would embed sustainability in what we do. Whether it is setting decarbonization targets for our portfolio companies or setting carbon reduction plans for each of our real estate assets. Those are things that we tailor according to kind of our investment needs and according to the mandates of the funds. But focusing on our operations, what happens in our offices, one of the commitments we've made is we want our office spaces to be, energy efficient. And so one of the things that we focused on is making sure that we have the hardware. So similar to Andrew, we have a lot of motion sensors in our office. So I need to be moving around, otherwise the lights will turn off on me. So we have motion sensors, we have, energy efficient lighting, etc. And so what we've additionally done is we've sought to obtain these LEED certificates for interior spaces. Maybe we go to the next slide. So for our major offices, we've targeted to achieve a LEED Gold or above for our Hong Kong office. And we've been able to obtain a platinum certificate for our Hong Kong office. I think in large part, a big contributing factor to this is really the building selection. I think everyone would have heard from Andrew and Phoebe's sharing. There's that collaboration, but also as tenant, when we do choose our buildings, I think it is important to choose buildings that have, this high green building credentials because we are able to get this platinum certificate due in large part to a lot of the base building provisions that Swire Properties provided. And so I think this platinum rating is one of the first in the region. And we've got a gold for our Shanghai office. You'll see in one of the pictures, we have a Tokyo office. And I could share a little bit more and put some stats to it. So Tokyo office is also one of our larger offices in the region. We have recently moved from an old premise into a new premise, started occupation last year, so 2024. And we did a little study on kind of like the energy kind of comparison. And so when we move from old office to new office, and for your reference, this new office, we are also targeting a LEED Gold, and which will be obtained later on in the year. So when we did the study, from the old building to the new building, new premise, we saw a 25% reduction in energy of the energy use in the office. And this essentially translates to 30%, 33%, I should say, of that utility cost reduction. And so this goes back to one of the introductory slides that Vidya was sharing that, there is a lower utility cost. And this is very tangible for us as we saw moving from one office to a new office, we saw energy reduce. But what's more important is, the financial impact as well too. We're reducing utility costs as a result of, some of these more energy efficient operations. So besides energy operations, one of our bigger kind of carbon footprint, besides our office footprint, is in our business travel. And so in the bullet point two there, we have made, internally some decisions and policies on, how we approach business travels. We would ask teams to optimize the business travels if they can, combine a couple meetings into one so they're not flying as often. We've also made a request on selecting flights with an option of sustainable aviation fuel to kind of promote the use of SAFs in our business travels. And all that we keep an account of. So we keep an account of, how many business trips, the distances of these trips and how many of these trips have SAFs, and we do a calculation and we measure that footprint over time. We'll have other measurements of facilities on site, things like recycling. We don't provide single-use plastics on site, etc. So all these good kind of environmental kind of initiatives that we have across our offices. And then the last bit there is on the offset that we do. Our strategy or our net zero strategy is really we reduce where we can, and hopefully by way of, LEED certification, optimize business travels. Like these are actions that we try to take or policies we take where practical and as far as possible. But where we cannot reduce any further, then we'll purchase the offsets on a two-for-one basis. And essentially what this means is for every ton of carbon emitted from our footprint, we will be purchasing 2 tons of carbon offsets for this. And so this has gone for the past 2 years or so since we've kind of set forth our net zero, operational net zero objectives. But besides that, I think besides a lot of the environmental initiatives, Andrew touched on the human experience, and this is something that I think is quite important to us as a firm too. So you see some of the pictures here. We have a cafe, we have green walls. In some of our offices, for example, in a Hong Kong office, we have a dedicated nursing room. So for the mothers that need a dedicated room, this is not just like a storeroom with, walls all around. We actually found a location where there are windows and there's a sink and there's a refrigerator that has all the essential facilities needed for mothers to use as they need for the nursing activities. So that's something that, we isolate the space out to do. We also isolate out a space for having a gym, a staff gym for some of our bigger offices. That's been kind of a staple for all new PAG offices, major offices in the region. And I think a big part of this is, we see this as a differentiator for us as well too. When we compare or when potential talent is comparing peer to peer, of course, they're not going to look at whether this company has a gym or not. But when they're onboarded, when they get to enjoy a lot of these amenity features within the premises, I think that's something that really strikes a chord with a lot of the staff here. Is that we have all these features. We promote a lot of wellness. We promote a lot of, kind of extracurricular activities beyond just work. So you see here all these pictures here. There are no pictures of workstations because we have a lot of fun at our offices. And so that's something we try to strike that balance. And I think staff appreciates that. And I think it is a differentiator when we compare to peers in the region as well too. So just to give everyone a little bit of flavor on kind of who we are and kind of what our expectations are in the spaces where we operate. So I'll, throwing it back to Vidya on any Q&As now, I think.
Yeah, that's That's great. Thanks so much, Jonathan. It really like highlights and echoes, the relationship aspect. The landlord with Phoebe saying that, it's all about the relationship they're having with the tenants, and the tenants want to have like better relationships and provide better spaces for their employees. So I think like every level of these interactions and relationships, we are seeking to elevate more than just provide the basic or bare minimum. So that's really great. Okay, so now, I mean, I'll just jump into the panel discussion part of it. Just stop share for a little bit. And yeah, so Jonathan, just adding to, the question that you brought up was that, you said when you shifted buildings, you had like a energy study done, right? Like, and you found that it was like 25% less. And that's a clear example of what tenants are going to start asking landlords, right? And is this something that you approached the owner and said, can you provide some data on the energy use of these buildings so that we can do some internal study?
So, if we're referring to kind of us as a tenant, I think when, just sharing from experience, and maybe this touches on some of the relationship we have with Swire and kind of the ongoing kind of that data sharing. So I think when we moved into this Hong Kong office, I don't think the GPP from Swire Properties was published yet or has been ready yet. So that wasn't, I guess, initially as. But but I guess zooming out, moving forward, I think when we do kind of, move to new offices, there are certain policies. So for example, we do ask when we do look at new office spaces, whether the space has a green building credential, whether the base building has a green building credential. And if they don't, we need to work with the landlord and really ask them, okay, what are your green features? How can you support us in, making some of these energy efficiency goals, etc. So across our offices, we do have a wider policy on when we select office spaces, we need to have these green building credentials. And then on an ongoing basis, and this touches on, using that GPP experience, it's some of the so besides monitoring and getting that data, I think another feature that maybe Phoebe didn't share, but we found quite useful is, Swire Properties would provide free energy audit, and I don't know if they still do, but we enjoyed that. We enjoyed that special feature when that was given to us. We thought that was super helpful, just in terms of, building service engineers coming to our office after it's all fit out. From an operational perspective, they walked around our office under our supervision, and just to see where we can improve. And I think having this free energy audit is quite different, and it's really been one of the things where we're like, okay, let's join the GPP because we'll get reporting, but we'll also get this free energy audit, which is going to help us identify ways where we can improve over time. So I think having that, special feature, having that kind of relationship and that engagement with the property developer has been quite instrumental in us kind of participating in this in this GPP pledge with Swire Properties.
Okay, that's interesting. So, I mean, so when Spire first came to you with this GPP program, like, what were your first reactions internally? Was it something like, did you all have any questions or hurdles before you joined, or was it that this was a no-brainer, we just have to join this program? And if so, like, what made it easy for you to join this program?
I think a big part of that when we first joined is, we need to have the data for our own internal reporting. And a big kind of that partnership is Swire being able to support us in getting a lot of that data,
Yeah.
energy data, but more importantly, some of the waste data. For example, it's hard for us at our own office premises to capture that waste data. But partnering with the landlord and having someone and a method of collecting that data, I think, and then automating it back to us. I think that's been super helpful in terms of, like, it'll smoothen out our processes, lessen time on our administrative staff on screening through the bills and the utility bills, etc., to kind of capture that data. So really having that partnership and having that data management aspect, I think that's been helpful. And maybe I'm jumping ahead, but, like, with with the application of AI, I think, this might be even, faster down in the future, but that's something to be sought out. I think there are a lot of security issues, etc., that we need to consider. But when it comes to data, I think, we need to capture it because we need it to buy the offsets, etc., right? So we need the data. And so this partnership really helps us capture some of that quite quickly and smoothly.
Right. So what was appealing was that this seemed like a holistic service that you didn't have to put in like much effort as a tenant as well. And this was provided by the landlord.
Yeah.
Got it. Okay. So Phoebe, I have a question for you. So this GPP program is quite popular. I mean, a lot of tenants like it, but there aren't, so some tenants still haven't signed up, right? And so I'm curious to know what you learned about like why some tenants join right away and why others hesitate, or what are the main barriers and like how do you plan to close that gap?
Yeah, thank you, Vidya, and thank you, Jonathan, for the sharing. I will come back to your sharing in a little bit. I think a lot of times when we see tenants who sign up for the GPP very quickly, it will be in the likes of similar reasons as Jonathan's company, because they see alignment with the company's commitment. They see that there's access to data. You can get into some green tools. Basically, you get access to a toolbox from energy audits to metering to waste data collection. And also, some companies see opportunities for staff engagement, either in our capacity build programs or just through internal engagement for the pledge. But there are also a lot of reasons where people don't sign up, right? Because sometimes companies do not have enough the manpower or resources or the lack of champion to vouch for participation in the program. Sometimes it's the senior management buy-in. There's also the aspect of global companies, international companies versus more local or Chinese companies, which might be less sophisticated in their sustainability journey. So there are a lot of reasons. And despite that, we have about 70% of our tenants in Hong Kong signed up already. So we're going to still try to get more. But I think more importantly is how we mobilize and activate the community that we already have. And so feedback like what Jonathan said is very, very key and important. And I think there is a journey from where we started the GPP with offering tenants with energy audits and basically providing a platform for tenants to upload the energy bills. To now we are evolving into more automated data collection through smart metering and also providing more granular data. Actually, for tenants now accessing the tenant portal, they can see their daily and hourly energy usage. So it's very helpful because they can see the energy usage during the office hour versus the non-office hour. They can also see like how each day's energy usage, water usage, and waste generation changes, which days they are generating more waste, for example, and the composition of the waste. So we're trying to enhance the data, the power of data analytics for tenants, because that seems to be an aspect that tenants really value.
Okay.
Yeah, and so I think it's also about listening to the needs of our tenants and continuously evolving and enhancing our offering as well.
I mean,
Understood.
just
Yeah.
just picking up on the point about data. So Jonathan's clearly articulated the benefits of that granular data from a tenant perspective in terms of managing their own utility costs. And as we know, GRESB requires the landlord or the building owner to measure not just the landlord consumed power in the common areas, but also the tenant. So the transparency of that data, availability and transparency of that data is a clear win-win for both
Right.
parties.
Yeah. So that's like the biggest indicator for whether a tenant will join these programs or not. Yeah. So, Andrew, actually, so I had a question for you was that, because you have like this broad level market overview, what early signals are you seeing that'll shape the landlord and tenant collaboration through 2026. So we know what's been happening so far, but what's going to happen in 2026? And are there shifts in expectations? Are there pressure points that tenants or even owners should already be preparing for?
I think a couple of topics spring to mind. The first one, we've kind of alluded to in this discussion with tenants being more um, re requiring more granular data. So asking a landlord whether the building has got green certification or not, that's kind of history. Tenants are now looking for quite granular energy use data. They're looking for what is the net zero carbon roadmap for that building. So being a lot more technical in their questioning, and that also has an impact on brokers and leasing agents. They need to be equally up to speed on these kind of requirements and technical specifications to be able to answer an ever increasing level of detail, I think, from the tenants.
Yeah.
I'd say the other evolving area, I think ESG is pretty well understood and known. Talking about the other elements of why tenants choose buildings, the human experience. I recall when I moved to Hong Kong years ago, a landlord kind of provided a shell, and it was the tenant who fitted it out to their own requirements. I think now landlords realize that it's the whole kind of street to seat experience that tenants are evaluating when they choose buildings. And the landlords are now much more aware and in tune as to what the tenant requirements are. So I think there is a much closer relationship, and I think that will further evolve in the future. So a much deeper understanding on behalf of the landlords of what tenants are really looking for beyond their four walls that they rent.
Understood. Yeah. All right. So, in the interest of time, I have just one last question for you is that, so this is for all three of you. And so right now, so many companies have low to medium engagement with their tenants today. And if you had to give them a simple roadmap, what are the top three things that a building owner in the year 2026 can do in the next 3 months, 6 months, and 12 months to start building real momentum with their tenants? Andrew, do you want to jump in first?
Well, I think we've got a very good landlord on the call who has got great relationships with their tenants, but that is not always the case. So I think if you're a landlord who doesn't have that in-depth relationship with your tenant, and you're perhaps undertaking an annual tenant satisfaction survey, that's really not regular enough. So I think in the next month you should probably spend a bit of time with your tenants, get to know them, understand what their journey is. Are they expanding? Are they contracting? What's the likelihood that they're going to renew their lease in 2 or 3 years' time, or whenever the lease expires, and plan that journey between now and when the lease expires. So yeah, much closer relationship with tenants.
Great. Phoebe?
Yeah, I will supplement on understanding the tenant's needs, because we do like satisfaction surveys, but we also sometimes do like specific surveys on the topic of ESG, trying to understand more in depth what our tenants' commitments are, their goals locally and globally, what have they done, who is taking the lead internally, if it is a professional ESG person, or is it like an office manager or a volunteer green team, like that I think changes how best to engage with them. And I think also there's a big piece of internal alignment, because like ESG is a very specific topic. But then if you have a leasing person who needs to go and talk to the tenants, they need to understand what they're talking about. So there's a lot of internal engagement, internal training to align our priorities and to shape the program together so it meets both the business and the sustainability needs. And I think my final point would be to develop some success cases with like-minded tenants, because that can really help to drive the morale and also provide you with an opportunity to deep dive, to develop a framework, to pilot some tools, and also to trial and error.
Right. Yeah, no, that's perfect. Thank you. And Jonathan, like from your perspective as a tenant, especially working with Swire's successful program, like what is your advice?
I think Andrew and Phoebe captured most of them. I'll give one example from, I'll put on our owner's hat in the region.
Yeah.
So in some of our Australia, New Zealand investments, what we have started to roll out is we've started to have these tenant ESG committees that we meet regularly. And so it goes with the whole concept of engagement. So not just a tenant survey, but really that engagement where you sit down at a table and everyone talks about, okay, what events should we do these upcoming, months or quarterly events, etc. So you engage tenant on what they want. Maybe it's beyond just an environmental initiative. Maybe, and I think what we see in our jurisdictions is tenants are more interested in a lot of the social side of things. So things related to wellness, well-being, etc. So those are the activities that we try to kind of engage our tenants on to kind of build on that. As owners, we want to build on that stickiness with the tenants, and so engagement is important. How you go about that engagement, I think it will depend on, your tenancy mix. It also depends on kind of your own priorities. But from what we've seen as being quite effective is really, all as a good example, that tenant ESG committee has been quite interesting as a new initiative for us.
Okay, perfect. Thank you so much. And well, okay, we are at time for this webinar. And thank you so much, Phoebe, Jonathan, Andrew, and thank you for the audience for your engagement. And we hope today's discussion offers some insights for collaborating. And we've covered a lot in just 1 hour. And what we've learned is that it's more about relationships. Like the relationships are at the crux of everything that we've talked about. And that is what we're seeing moving into 2026 as well. So yeah, thank you for your participation. And lastly, I know we're cross time, but there is a survey link in the chat. And if the audience can take that, we're here to improve your webinar experiences as well. So please do take that survey. But thank you, everyone, and have a good
Thank
rest of the
you.
day.
Thank you.
Thank you.
Bye.